Hello. Today we're going to discuss mortgage credit certificates, which we commonly call MCCs, and how it could help you put more first-time home buyers into a new home. There's both income and purchase price limits for these certificates, but this can definitely allow you to qualify more buyers for a purchase of a new home, depending again on whether they qualify for this or not. How can this help you? Well, the mortgage credit certificate is a dollar for dollar reduction of their tax liability, which means that depending on the loan amount and the percentage of the interest that can be taken as part of the certificate, you can reduce your borrower's DTI by that amount. Some examples of how this can be done and how can this help you. Well, if you have a buyer whose DTI is right there, your FHA at 46%, and you need just a little bit more to avoid having your borrower to put more money down or have your borrower pay off liabilities or lower rate that may cost them money, you can use this mortgage credit certificate in order to reduce that, because this is it's a calculation that goes directly into your DTI, because it's an additional income that you can issue your first-time home buyer. How is this calculated? For example, you have a loan amount of $180,000 at 5%. The yearly interest on that loan would be $9,000 for the first year. 20% of that would be $1,800. That $1,800 you can divide by 12, and you can issue your borrower an additional $150 of income that you can apply towards your DTI. This can obviously help your borrower qualify and obtain lower ratios. In some cases, it may even move your borrower from a self-employed borrower from a 2-year requirement for self-employed income to a 1-year. So this can be obviously very helpful if you know how to use it and you're able to meet obviously the specifications of the program. Some of the specifications of the program and some of the items that your borrower must meet, your borrower must be a first-time home buyer, meaning that they could not have owned property within the last 3 years. The other thing is that obviously there is income limits. The income limits are based on the household, meaning any member of the household over 18, their income must be included in this limit. The income applies depending on the area that you're purchasing and also depending on the number of people who live on the household. The more number of people that live there, the higher the income limit is. Therefore, you'll have more buyers qualify. The other restriction is the purchase price. The purchase price, there's a purchase price limit depending again on the county, both which is reasonable. I would say that most of our buyers would qualify for that. And both of those limits have gone up now in 2020, which is why I think this is a great tool, because now more of our buyers will be able to qualify for this. One of the other requirements that is important also, the buyer must take the first-time home buyer education, regardless of program or LTV. That must be done. How can you provide this program to your buyers? You have to be an approved LO with the Florida Housing Finance Corporation. This is a company who actually issues this credit and administers the credit. You have to take only a few extra steps to get this done. The course, from what I know, it's only a 20-30 minute course, and you can obtain more information about that directly from our secondary department. Aricel will be able to help you and guide you as to what you need to do. Your processors are also knowledgeable on the program, and they should be able to help you figure out if your borrower qualifies for this program. Only a few extra steps need to be taken in order to be able to issue these credits. So I think it's worth it. It's worth it, especially if you can put a buyer into a home with just a little bit more, So it takes a little bit extra time, but it's definitely a good tool to have on your end, and it will help you get those buyers that otherwise would not approve, or would have to put more money down, or would have to pay off debt in order to qualify. I hope this has been of help, And if you have any questions concerning this topic, you can reach out to our underwriting team through the underwriting scenario email, or you may reach out to me directly via email. Thank you.